Alors, ce choc sur l'offre d'énergie a frappé l'économie mondiale à un moment où la croissance économique était plus forte qu'on ne l'a anticipé auparavant. Et ce que l'on constate ici, sur cette planche, c'est que la croissance mondiale s'est poursuivie à un rythme soutenu, et ce jusqu'à la fin de l'année dernière, et ce malgré les vents contraires provoqués par l'augmentation des droits de douane à l'importation aux États-Unis et l'incertitude entre la politique commerciale. En glissement annuel, la croissance du PIB s'est établie à 3,4 et 3,2 au troisième et quatrième trimestre 2025. Depuis l'apparition des perspectives économiques de l'OCDE en décembre, les données relatives au PIB du second semestre 2025 ont été révisées à la hausse pour un certain nombre de pays du G20, compris le Canada, les États-Unis, l'Inde, l'Indonésie et le Mexique. Alors, du fait de ces évolutions inattendues de l'activité à la hausse, eh bien, les perspectives mondiales de croissance pour 2026 s'étant améliorées avant le conflit annuel au Moyen-Orient. Ce conflit, le choc sur l'offre énergétique qui en a découlé, ont maintenant réduit notre trajectoire prévue de croissance mondiale cette année, mais aussi pour l'année prochaine. Les indices des directeurs d'achat, PMI, pour les premiers mois de cette année, donnent à penser que la croissance mondiale est restée solide, tant dans les secteurs des services que dans l'industrie manufacturière. L'activité dans le secteur des technologies a été particulièrement vigoureuse, dopée par la hausse des investissements dans l'IA. La croissance de la production industrielle de produits informatiques et électroniques a dépassé la production industrielle totale en Asie, en Europe ainsi qu'aux États-Unis. Le relèvement des plans d'investissement pour 2026 de grandes entreprises technologiques américaines, mais aussi chinoises, soutient encore cette croissance. Alors, à la suite de la décision de la Cour suprême des États-Unis à l'encontre des droits de douane imposés en vertu de the International Emergency Economic Powers Act, les États-Unis ont instauré un nouveau droit de douane de 10 points de pourcentage sur tous les biens importés, sauf pour les produits soumis à des droits de douane sectoriels ou encore exemptés de droits de douane. En mars, nous estimons que le taux effectif moyen des droits de douane sur les importations de marchandises aux États-Unis était de 9,9 %, soit en baisse par rapport à 13,8 % en décembre dernier. Toutes choses étant égales par ailleurs, cette baisse des droits de douane devrait soutenir le commerce mondial, même si l'incertitude persistante quant à la durée pendant laquelle les droits de douane actuels resteront en vigueur continue de peser sur les décisions en matière d'échange et d'investissement. Nos projections reflètent deux dynamiques clés de l'économie mondiale jusqu'à présent, courant 2026. Alors, d'un côté, un renforcement de la croissance entre nos perspectives économiques de décembre et le début du conflit du Moyen-Orient, et d'un autre côté, un affaiblissement ultérieur de ces perspectives à la suite du déclenchement du conflit et des perturbations qui en ont découlé. Bon, visiblement, au niveau d'incertitude quant à la trajectoire et l'impact futur de ce conflit. Et à ce titre, donc, nous nous appuyons sur des hypothèses techniques qui sous-tendent effectivement ces perspectives. Surtout pour ce qui est donc des cours de l'énergie, nous nous appuyons sur des hypothèses techniques, évolution donc du prix de l'énergie, raccord avec la tarification des hydrocarbures à terme à partir donc de mars, 20 mars. Par conséquent, nous prévoyons maintenant Nous partons en fait du principe de 107 $ par baril pour le deuxième trimestre de 2026 et s'ensuit en fait un fléchissement à 78 $ le baril d'ici 2027. Dans l'ensemble, nous prévoyons maintenant une croissance du PIB mondial de 2,9 % cette année, de 3 % l'année prochaine, suite à une croissance de 3,3 % l'année dernière. Ce chiffre est inférieur à la trajectoire de croissance attendue de l'économie mondiale avant le conflit, et c'est de 0,3 points de pourcentage en 2026 et de 0,1 point de pourcentage en 2027. Alors, si la croissance cette année et l'année prochaine sera inférieure à ce que nous prévoyons à l'origine dans les présentes perspectives économiques.
Look, our projections for 2026 are unchanged. That is a result of the strengthening of the growth path observed between the December outlook and the onset of the conflict in the Middle East. For 2027, growth is revised down by 0.1 percentage points relative to December. Highlighting some country-specific developments. In the United States, growth is projected to be robust, but to slow from 2% this year to 1.7% next year, with strong II investment being offset by declining gains in real incomes. In Japan, growth is expected at 0.9% in both 2026 and 2027 as higher energy import costs slow the momentum of economic activity. For the euro area, growth this year has been revised down to 0.8% due to higher energy prices, while for next year, stronger defense spending is projected to lift growth to 1.2%. China's growth is expected to ease to 4.4% this year and 4.3% next year as a result of rising energy import prices, continuing adjustment in the real estate sector, and fighting fiscal support. Now, before the onset of the conflict, inflation was on a downward path. Higher energy prices have reversed that trajectory. We have revised upwards our inflation projections for this year due to higher energy prices and pressures on supply chains. Average inflation in G20 countries is now projected to reach 4% this year and to moderate to 2.7% next year, assuming energy price pressures fade. Compared to our December economic outlook, inflation for this year, therefore, has been revised up by 1.2 percentage points for the G20 as a whole and by 0.3 percentage points or more for 14 G20 countries. Of course, as I've already mentioned, there is a high level of uncertainty. There's a high level of uncertainty around the duration and the magnitude of the current conflict in the Middle East, and that means that this outlook is subject to significant downside risks that could result in lower growth and higher inflation. Market expectations suggest that energy prices will gradually decline over time, and this assumption, as I've indicated, underlies our projections. However, a longer-lasting disruption to shipments through the Strait of Hormuz or the persistent closure of oil and gas infrastructure could have significantly more negative consequences. Our report simulates a scenario in which oil and gas prices remain higher than our baseline projections for the next 2 years and global financial conditions tighten further. In this scenario, global GDP is estimated to be 0.5% lower by the second year than otherwise expected, and global inflation would be 0.7 percentage points higher in the first year and 0.9 percentage points higher in the second year. The consequences of the conflict also risk spilling over to global food supply and prices. Gulf states are major producers of ammonia and urea, key fertilizer inputs that are essential for high-yield agriculture. For example, in 2024, Gulf states accounted for 30% of the world's urea exports. Prices of futures contracts for ammonia and urea have already risen significantly. These increases in fertilizer prices and supply constraints can result in higher food prices, which could impact food security and real incomes, especially for lower-income households which spend relatively more on food. Risks from energy supply disruptions are heightened by low European gas reserves. Natural gas storage levels in EU countries are lower than usual at this time of the year and will need to be gradually rebuilt in the coming months to prepare for the next winter. The recent increase in gas prices means that refilling storage could be more costly, requiring additional funding and putting further upward pressure on inflation. Fiscal and financial risks are also significant. Yields on sovereign bonds have been trending up over the last 5 years across OECD countries, including for the United States, Japan, Germany, and the United Kingdom as a result of higher monetary policy interest rates and elevated levels of public debt. In March, that ticked up in the context of the conflict in the Middle East. In parallel, the volatility in financial markets has increased. Prolonged energy supply disruptions or weaker than expected returns from AI innovations could lead to significant repricing in financial markets, reduced supply of capital, and also a slowdown in business investment. So turning now to policy priorities. The key priority is to re-establish secure trade routes through the Middle East and safeguard energy infrastructure. As long as this is not achieved, higher energy prices are likely to impact households and firms. Spending on fuel for transport equipment, electricity, natural gas and other fuels is estimated to account for just below 6% to 12% of consumer spending across G20 countries. Potential policy measures to cushion the impact of the energy price shock should be targeted towards those most in need and be temporary with clear expiry mechanisms. Their scope needs to take a country's fiscal space into account, and their design should ensure that incentives to save energy are preserved. Broad-based subsidies or price caps, while possibly faster to implement, should be avoided given their high fiscal cost and weaker incentives to reduce energy consumption. Strong fiscal discipline is necessary to tackle high public debt and to maintain fiscal space, ensuring the capacity to respond to shocks. Shocks, as highlighted again, can always come our way, as highlighted by the conflict in the Middle East on this occasion. Total public debt in the OECD was 113% of GDP in the second quarter of 2025, up from 74% at the end of 2007. Further spending pressures from population ageing, defence requirements and debt servicing are high. Stronger efforts to contain and reallocate spending, improve public sector efficiency and optimise revenues are required and set within credible medium-term country-specific adjustment paths. On defence requirements, the evolving security environment is leading G7 countries such as Canada, Germany, Italy and the United Kingdom to increase their defence spending. Efficient procurement will be very important to contain costs, encourage innovation and enable an effective defence industrial base. Enhancing competition, simplifying procedures and shortening acquisition cycles can all support this effort. Median inflation across G20 countries has been relatively stable over the past 2 years. However, the energy supply shock poses a new challenge for monetary policy makers. Market-based measures of what inflation will be in 2 years' time have edged up since the end of February by 0.3 percentage points in the United States and 1 percentage point in the euro area and the United Kingdom. Central banks need to remain vigilant and attentive to shifts in risks to ensure inflationary pressures are durably contained. If inflation expectations are well anchored, the current supply-driven rise in energy prices can be treated as a temporary situation and need not trigger a policy response. However, policy adjustments may be required if broader price pressures or weaker labour market conditions emerge. Constructive dialogue between countries remains very important to ensure a lasting resolution to trade tensions. New restrictions on goods imports introduced since the start of 2009 are now estimated to have affected nearly 20% of the world's total imports last year, up from 3.1% in 2016. All other things being equal, well-functioning, open global markets mean better living standards, stronger growth, higher incomes, better living standards. We need to continue to draw on these very real benefits while tackling genuine concerns around unfair trade practices and unlevel playing field supply chain resilience challenges, in particular on key strategic product lines and more generally economic security, however to do so in a way that preserves the economic benefits of open markets and rules-based trade. Countries can reduce their exposure to geopolitical shocks by lowering reliance on imported fossil fuels. This is especially important for large energy importers, for example, Korea, South Africa and India. Expanding domestic energy production from renewables and improving energy efficiency can strengthen resilience while also supporting achieving climate objectives. So in closing, this interim economic outlook projects the negative impact of the conflict in the Middle East and the associated energy supply shock on the global economy. But thanks to positive developments between our last projections in December and the start of the conflict, the overall outlook relative to December is broadly unchanged. But downside risks are high. Optimizing monetary, fiscal, energy and trade policy will be important to reduce risks, and to continue to strengthen the resilience of the global economy moving forward. Thank you, and I now invite Assa Johansson, Director in our Economics Department, to come and join me to deal with any of the questions that you might have.
Thank you, Secretary General. We'll move to the questions, just looking here if there are any media in the room to begin with who'd like to ask one. If not, we'll go to the ones online. I have a question here from Nuran Erkul, who's with Anadolu, the Turkish agency. She asked, your projections assume that energy market disruptions will ease and prices will decline again. But if energy prices remain elevated for longer, which could be the case, especially for LNG, how much downside risk could this create for your global growth forecast?
So, I mean, the OECD can't make a judgment on how much longer the conflict will last. We can't predict when it will end. We can't predict how much longer it will last. We can't predict, how much worse it might get. We are using a technical assumption, and the technical assumption, as I've indicated in my presentation, is that energy prices will evolve in line with futures markets pricing for oil and gas, and the date that we picked in terms of closing off our projections was March 20. As I've indicated, for the oil price, we are assuming the technical assumption is of an assumed oil price of $107 US per barrel in the second quarter of 26, and with a gradual decline to around $78 US per barrel by the end of 2027. Now, what I would say here is that if we were to run these projections again today, the price for oil would actually be lower. And that is just a function of the level of uncertainty and bringing with it a certain level of volatility. So the best thing that we can do in all of the circumstances is to rely on the futures market. Now, we do run we do run like a worst case scenario in our report, and I've indicated what that would mean in terms of the growth impact and in terms of the inflation impact during my presentation, but I might just ask Assa here to complement.
Thank you. Yes, so we have an adverse scenario where the oil prices and gas prices are higher, peak at a higher level and stay higher for longer. So in this downside scenario, oil prices will peak at $135 US per barrel in the second quarter of this year, gradually falling down to $86 at the end of 2027. Gas prices peak at 77 euro per kilowatt hour and then falling down. And in this adverse scenario, growth at the global level would be 0.5 percentage point lower in 2027, and inflation would be up by 0.9 percentage point. So that just gives you an illustration on the potential impacts of alternative assumptions that you could make on energy prices.
Another question here from journalists watching online. This one is from Will Horobin at Bloomberg. He says, you've abruptly increased the inflation forecast but made smaller downward adjustments to the growth projections. Are the major economies more resilient to price increases than in the past?
So we have revised our inflation projections upwards and our GDP projections downwards. So as the Secretary General pointed out in the beginning, we entered into this year with a resilient global economy. So many of our economies was actually doing much better than we actually expected in our December forecast. So they are coming into this year with a positive momentum of growth, and that is then being offset by the energy price shock to some extent. So that's why the revisions on GDP seems a bit smaller than for the inflation forecast.
A follow-up question from Will at Bloomberg. You call for central banks to remain vigilant. Should the focus be more on inflation or risks to growth?
Well, I mean, in the end, central banks will need to continue to make prudent judgments based on the data as it continues to emerge. I mean, I guess, what we would say is that there clearly is an energy price shock here, and it's going to be important to, monitor to what extent that is going to be temporary and what the appropriate response is in that context. But of course, I mean, there are also downside risks in terms of, the labor market developments, and, what we're saying is, it's going to be important to remain focused on making sure that inflation expectations are well anchored moving forward.
A question from Lee Thomas with Reuters. Your outlook says that there could be a potential 0.3 percentage point upward revision to global growth, that was entirely erased by the conflict. How quickly could that growth be recovered if hostilities ceased?
So yes, we have calculations on what our growth path would look like if the energy crisis had not occurred. So what this calculation does is takes the growth path that we saw in our December outlook and updating that with the revised data that come in at the end of the last year, which was on the upside, and then the new data for this year. And in this path, growth would have been 0.3% higher than we see currently in our forecast. And depending on how fast or long-lasting this crisis is, which is very difficult to judge, how quickly we can come back to the situation before, it depends on the duration of the crisis, which is highly uncertain.
A question from Angel Calvo with the Spanish news agency EFE. Can you explain why the outlook for the European countries has been revised downward for 2026, while the opposite is true for the United States? Does this mean that rising gas and oil prices will benefit the United States as an oil and gas producer?
Well, I mean, in terms of the European Union, I mean, the effect that we see is the effect on global energy prices. I mean, the direct exposure to gas out of the Middle East, is comparatively low for Europe, but of course there's a general price effect that flows through. Now, in terms of the U.S. economy, I mean, there has been, GDP growth in the U.S. has been buoyed by very solid private consumption, especially by upper income households whose wealth, had been boosted by a significant rise in equity prices. The household saving ratio has fallen in the United States. And, what we've seen is very significant investment, in particular in relation to AI-related infrastructure in the United States, which has also underpinned growth. So there's a couple of factors in the United States that sort of explain a level of comparatively stronger growth environment. Higher energy prices are not a positive factor for the United States, as they are not for Europe either.
Question from Paolo Levi with the Italian press agency ANSA. Economic outlook for Italy is worse than in the December outlook, and the inflation continues growing. What's your main message to Italy today?
Yes, so in the case of Italy, we have seen relatively weak employment growth going in, and consumption is also weakening. We do think that there will be some support to investment from the Recovery and Resilience Program. So our forecast for Italy is at a growth of 0.4 this year and 0.4 of this next year as well. Still, Italy was doing a little bit better. There is some momentum coming in from last year, but energy prices are affecting consumption, so this is dragging down our outlook for Italy.
A question from Joel Hills with ITV in the UK. Why was the UK getting the biggest downgrade in your forecast? And similarly, could you reiterate on the US upgrade?
So the United Kingdom, the last year of the United Kingdom in the end of 2025 came in on a relatively weak note as compared to some of the other, for example, the United States. And that meant that the momentum going into this year was weaker, which meant less positive upside factors offsetting the negative energy price shock. So in more technical terms, the carryover from the last year into the UK was, for this year in the UK was negative, which meant that the growth was lower. So that's behind our downward revision in the UK.
Just looking here in the room, if journalists here, if there are any questions. If not, I'm going to go to the final question that we've received from the Zoom, going back to Nuran from Anadolu Agency, who points out that several economies, Turkey, the US, the UK, are facing above target inflation. Are these countries disproportionately exposed to the current energy shock, and are there countries that are less exposed?
So countries are differently exposed to the energy shock depending on the energy intensity of the production, as well as the diversification of different energy sources they have. And this is going to play out differently across different countries. So what we are saying is that there is pressure on inflation, so central banks needs to be vigilant and monitoring the situation carefully and watching the incoming data and to be ready to act in case there are second-round effects on inflation.
We've exhausted the time and the questions that we have, so thank you very much for your attention. All the information on the outlook available on the OECD website, of course. Thank you very much.